May we be standing for the national anthem.
Stand and sing of Zambia, proud and free, land of work and joy in unity, victors in the struggle for the right. We won freedom's fight, oh, one, strong and free. Africa is our own motherland, fashioned with and blessed by those who blend. Let us, all her people, join as one, brothers under the sun, oh, one, strong and free. One land and one nation is our cry. Dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh, one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Free men we stand under the flag of our land. Zambia, praise to thee, oh, one, strong and free.
Thank you very much. We may remain standing for a prayer by Mrs. Benzo Chisala, Examiner Management Reports.
Shall we bow our heads in prayer? Our God and Father in heaven, we give you praise, we give you glory, and we give you honor. Want to thank you, Heavenly Father, for the gift of life. Want to thank you, Lord, for the privilege of being present in this meeting today. Just want to thank you for each and every person who's present here with us. Lord, in your word, you guide us that we should seek you and acknowledge you in all that we do, and you shall direct our path. This morning, Lord, we invite you to be present with us, to direct our path. We pray for wisdom and grace upon all the speakers. The Lord, may they speak diligently under your guidance and under your spirit. We ask all this in the name of our Lord and Savior, Jesus Christ, who lives forever and evermore, we pray, with thanksgiving in our hearts. Amen.
Thank you very much, Benzo. We may be seated. Allow me to acknowledge the presence of the governor, the deputy governors, members of the Monetary Policy Committee, directors here present, members of the press, ladies and gentlemen, good morning. I welcome you all to the third Monetary Policy Committee press briefing for the year. As always, the Monetary Policy Committee held its meeting on Monday and Tuesday, and this morning the governor will announce the decision of the committee. Let me take this opportunity to introduce to you the dignitaries up front here. We have the governor, Dr. Denny Kalyalya, who will be announcing the decision of the committee, and he's flanked by his two deputies, Deputy Governor in charge of operations, Dr. Francis Chipimo, and on his left, we have Deputy Governor in charge of administration, Mrs. Reka Chifue Muhango. Next to Mrs. Muhango, we have Director in charge of economics, Dr. Jonathan Chipili. On Dr. Chipimo's right, we have Director in charge of bank supervision, Mrs. Gladys Chiwele. Without further ado, I will at this point invite the governor to address the House. Governor, sir.
Let me join Bessie, the directors of ceremony, in welcoming you all to this morning's briefing, and to warmly welcome two the others who are watching us from wherever they are, that you are most welcome as well. We'll share with you, as always, the deliberations of the Monetary Policy Committee meeting, which took place as indicated this past Monday and Tuesday. I should also hasten to add that this is the first time that we are holding this MPC or this media briefing under the new Bank of Zambia Act, which came into effect on the 11th of August this month. So there are going to be some changes that you are going to see going forward resulting from that piece of legislation. So once again, thank you for coming. Today we have 7 sections that I'll try to quickly run through for you to appreciate the decision that we made. Firstly, of course, is to let you or inform you the decision that the committee made. Then we'll immediately look at the inflation outturn and the outlook of the same. We then turn to the foreign exchange market because that also has a very strong bearing on what happens to inflation. We look at the external sector as well by focusing on the current account so that you have an appreciation of what is happening in the external sector and how that may relate to our situation here at home. Then we look at the money market by looking at interest rates, domestic credit, and the money supply. Before concluding, we'll have the opportunity to look at domestic economic activity and the outlook, and then, of course, conclude the presentation. At its meeting held on August 21st, 22nd this year, the Monetary Policy Committee decided to raise the monetary policy rate by 50 basis points to 10%. So the current rate was 9.5%. So with this adjustment, the policy rate will move up to 10%. Now, why did the committee make such a decision? You may be asking. The decision was informed by the movement of the current and the projected inflation away from the 6 to 8% target band and the need for us to contain inflation expectations. The committee, in coming up with a decision, also took account of the financial sector stability and sluggish growth that we are seeing in the economy. So it wasn't just focusing on that, but looking at what this would entail for these other parts of the economy. In terms of inflation, why you may say, what are we really saying that inflation is moving away from the target band? Well, what we see is that after declining for 6 consecutive quarters, inflation rose in the second quarter of 2022 to an average of 9.9%. This was a movement of about 3.3 percentage points from the Q1 of 2023, which clearly shows a movement away from the target range. Graphically, this is what we are showing. Firstly, if you look at the table on the left, as always, this table is divided in 2 parts. The first part, or the upper part of the table, is showing what is happening on average. Then the lower part, we are showing what is happening at the end period. So if you focus for a moment on the upper part of the table, you see the first column is row in white, that's overall inflation. And you see that whereas in Q1, inflation was 9.8%, in Q2, that moved to 9.9%. Now, looking at the components of that, which is food and non-food inflation, you see that for food inflation, it reduced slightly. But on the other hand, non-food inflation rose from 6.8% to 7.9%. The story on the end period basis is slightly different in that for the overall inflation at end June, it had come down to 9.8%, and for the food inflation, it continued also to decline, but non-food was rising. Graphically, this is what we are showing on the right-hand side, but focus your attention on the band that is there in brown. That's the target range that we are given to observe whenever we are doing our operations. So you see that if you look at the dark blue line, you see that that's above the target range. Non-food is below that, which is within the range, but the food inflation is above the range. So combined, they both push inflation above the target. So the reasons for this are largely to do with the lagged pass-through from the depreciation of the kwacha that was witnessed. And currently we do have also higher maize grain prices as well as meat prices. There has been also, surprisingly, in the quarter, reduced supply of vegetables, and the upward adjustment, the recent upward adjustment in the electricity tariffs, the secondary third round effects are also explaining that move. Now, on vegetables, I think anecdotal evidence shows that we seem to be really moving away from growing vegetables, because previously when you moved around, even the city, you could see a number of vegetable gardens. But these days it seems we are putting a lot of housing projects, and that's something which we may have to look at very closely, because having a little garden can go a long way. Now, we said that up to June, the inflation had been up, but the latest reading in July showed that inflation actually was even rising further to 10.3% from 9.8% in June. So what we are saying basically is that inflation is elevated, and projections are showing that it's going to go up even further. So inflationary pressures that we are observing continue in the forecast horizon. The forecast horizon here is the 8 quarters ahead that we are looking at. So what we see is that this is going to be rising. This time around, we thought that we should let you in to see actually what the projections are that we are referring to. We have so far been sharing the figures only, but this time we show you this chart where you see the band again. That's the target range that we are aiming for. But if you look above that, you see that there's the red dotted line. That was our projection when we last met in this very room. That was in May. But now the black dotted line is what the current projection is showing. So you can see that that is moving further away from the target range. We have, yes, adjusted the policy rate in the 2 previous meetings that we had by 25 basis points each, but clearly that didn't go far enough to bring inflation to the target range, and the year is running. Now, we could go on in terms of the factors, but I think by now they should be quite familiar, some of which are really the materialization of the same upward risks that we had highlighted in the previous period. Now, some of these, much as they have materialized, the process is still continuing. For example, the Russia-Ukraine war, no one had imagined that this war would still be on this time, but you can see that there is even intensification of fighting in some cases, and that is affecting the supply chain in those countries which are connected to that. We are not spared in that respect. So these factors, we have to keep them under watch because they do have that impact on our inflation. Turning to the foreign exchange market, what we see is that while the kwacha appreciated by 4.8% against the US dollar in the second quarter, it depreciated by 11% to 19 kwacha 48 ngwe per dollar between the end of the second quarter, which is end June, and August 22nd. August 22nd is just yesterday when we are meeting. So this is depicted in the chart on the right-hand side. The kwacha US dollar exchange rate is what you show at the top. So what you see at the end of that chart, you can see that upward pointing the nature of the line. So you can see against all these currencies that we are referring to, that the kwacha in the period after the second quarter has been depreciating. Now, what we had expected previously was that with the deal on debt restructuring being reached, at least the main aspect of it, which now we are still waiting for conclusion of the MOU, but the main element of that deal was reached, had some positive impact in terms of announcement effects. Unfortunately, that did not last long because we needed to have had some other flows to augment supply of foreign exchange in the market. One thing also we're observing is that as the economy is coming out of COVID pandemic, there is more activities. I think that's not unique to Zambia. This is the case in other economies as well. But that comes with the increased demand as economic activities also increase. Now, to be able to meet that demand, you need supply of foreign exchange to rise as well. But that wasn't the case, hence the depreciation that we are referring to. For our part, we always look at the volatility and see what we could do within our means to manage that volatility. Now, sometimes when you look at the chart, like you look at this is a steady state, which does not reveal the intraday kind of movements that go on. But for those who are in the dealing room, this is something which they deal on a really constant basis. So the end position that you do is in many cases a moderated outturn. So you may say, well, why is that you are talking of this volatility, but we are not seeing it? So by the time you see it, actually there has been a lot of activity that has gone behind the scenes to try and manage things. So as what we are saying here is that to support the market and manage that liquidity, because there are very critical imports that we need to have at all times. notably fuel, medicines, and the other inputs, say, in the agriculture sector. So those have to come, because if we don't do that, we are sowing a seed for the next day's problem. So to support that, we had to provide about $300 million to the market during this period. Much of that came from the money that we got from the mining companies in the way of taxes. So that's what we are saying there at the bottom of that chart. Now, to look at the supply arrangement, this is what we see, that in Q2 23, mining tax receipts rose to 242.4 million. You can see from the previous chart, that's the money which we put back into the economy. But these were still lower than in the previous periods. Notably, if you look, take from the fourth bar from the right of the screen. I don't know if it's right for everybody, but from me, it's from the right. You see that's in 2022, all the 3 quarters of that, or should I say all 4 quarters, it shows that supply then was much healthier than it is in 2023, notwithstanding the fact that in Q2, the supply improved a bit, but demand obviously also continued to grow, as I explained. In the case of commercial banks, we see that the banks also bought quite a lot from the mines and other sellers of foreign exchange. That amount that they bought rose by 7.3% to 1.8 billion. So you see this in this chart. Look at the far right. You see that the blue and the brown line or orange are almost evenly matched. So in their case, what they got and what they sold were more or less matched. But there again, you see, if you look back, there are periods when this activity was much healthier than it had been in the quarter under review. So moving on, we look at the other aspect which you often ask about, is the reserves position. The reserves position, given the interventions and the need to meet the other requirements of government, to service debt, I think contrary to what is perhaps widely held, that we have not been doing debt service, is not the case. We do service multilateral debt. And in fact, for us to continue in these negotiations on debt restructuring, the requirement is that we have to be current on those payments. And that's why the IMF and the World Bank, the ADB, are able to provide fresh money. Remember that to get the ECF, we had to get this financing assurance from the creditors, without which we wouldn't get that, because it would be lending into arrears. So that aspect has to be borne in mind. That is, it's not zero debt service that we have at the moment. But as I said, there are some aspects that require the use of reserves as well. So on the right there, we are showing where the reserves position were at end June, and the black line there is showing the month of import cover. So that's what it's showing, is just reflecting that, but translated into months of import cover. So as at end June, the import cover is 2.9 months of import cover, which means that we are slightly below what the target is for this year. But I think in November, we'll be able to see very clearly where we would be for the end of the year. The current account we see how we are doing in terms of trading with the outside world. What we are observing is that the deficit and during the period under review widened slightly. So on the chart there, you see the black line there. That's what is showing the overall current account balance. You can see it's pointing downwards. There is a zero line there. If it is below that, that means it's a deficit. Above it, that's a surplus. So as you can see from the chart, it's below that, and it was below the previous period, but it has gone slightly lower during the period that we are talking about. This was largely driven by the rise in imports. As we said, there is more activities because that in exports did not fall much. So it meant that we were paying out more than we were receiving. That's why that deficit is there. But there's an upside to this, that going forward, we expect the current account actually to improve. What we are saying is that the deficit will reduce, and in fact, in the medium to long term, we should see that the deficit will be turned into a surplus, because it is expected that there will be more exports of goods and services than we are importing. This is on the back of some of the pronouncements that we have seen and some of the activities that we are witnessing forward. And as the debt restructuring process comes to a conclusion as well, it is expected that there will be more activities going on in the economy, which would ramp up the current account balance. In the domestic market interest rates, we see that obviously with the adjustment that we made, the transmission mechanism here is working in the sense that you expect that to go up. We see that the overnight interbank rate marginally increased, and we see that on the other hand, rather, we see a growth in credit and money supply slowing down. But it's important to point out that if you look on the chart on the right, the blue parts here that represent lending to the private sector, you can see that this is now becoming more prominent than was the case previously. That's very important because we have been talking over about the private sector being the engine of growth. Of course, it's still at early stages in terms of growth, but you can see that the red has receded quite considerably. That's consistent with what the ministry or the minister was even saying, that the deficit is being narrowed. So the crowding out that we were seeing in previous periods is beginning to pass out, so that we have more credit going to the private sector. But you may say that, well, but this raising of the policy rate will do the opposite. Well, we are looking at the period ahead. If we don't address inflationary pressures, the inflation that is going, that by itself will shorten the lifespan of that buoyancy that we are seeing. So to safeguard that in a sustainable manner, we need to have inflation under check. That way we can count on having robust growth going forward. So in terms of money supply, we see that that came down, but that had to do with the valuation effects. The period that we are looking at, the exchange rate had appreciated. So when we translate the foreign currency deposits into kwacha, it means that it goes down. So this graphically is what we are showing here. This is money supply. We have year on year, which is the right-hand side with the blue line. And then we have year-on-year exchange rate adjusted. When you adjust by the exchange rate, you see the dotted line there. It comes down for the reasons that I have explained. When it depreciates, it will go up, but real growth may be also affected in the process. The red one, that's quarter on quarter, is more volatile than the year on year. Yes, you see that deep kind of decline referred to there. Domestic economic activity, we see that the survey of business opinions and expectations and the Stanbic Bank Zambia PMI, that's Purchasing Manager Index, point to improved economic activity. How do we tell this? Look at the chart on the left-hand side. The period that we are focusing on is represented by the blue web there. In the web, that chart, you can see that in a number of areas, it's outside the previous period, this chart. So that's what shows that it has to expand. To really be very expansionary, you have to be at the edges of that web. But we are not yet there, but we see signs that there was some positive activity there. On the right side, that's the Purchasing Manager Index. The way to read that is that we have that 50 mark line. Above that, you can see it's green. The coloring is green. It means that there is positive activity. When it is below, it means that you are not doing as well. So in this current circumstance, we see that this has gone up. So we see that in the quarter under review, there was some positive. But going forward, because of some of these pressures that we are seeing, this may be tempered somewhat, but we'll see in the next period. Looking at GDP, it's 2000 is projected to be lower due to further contraction in the mining sector, as well as a slowdown in the education and the electricity sectors. These were the major drivers in the previous periods, but they have reached a plateau more or less. So we need to see other sectors coming to the table to push growth. Now, what we are saying is that in the medium term, meaning starting in the 2024-2025 period, we see that growth is going to pick up, which is underpinned on the projected recovery in the mining sector and the sustained growth in information and communications, financial and the insurance sectors, as well as retail and the wholesale trade. Now, ICT, I think, is one which we have seen really growing even during the period of COVID. So this has continued to be an important driver of growth in our economy, and a lot of activities or things are happening in that space, notwithstanding the intermittent challenges of cybersecurity, but colleagues in that field are doing all they can to really contain this problem. But we see that growth now. The dotted lines on the chart there are reflecting different views of different players. So if you look at the black one at the top, which is the Ministry of Finance, that was their projection in July. This time around also we have the red one, which is our own in-house projection that we have done. They are all pointing that there will be some growth, although it may temper. So this is an area where really a lot of focus has to be. If we have to come out of some of the challenges we have, like debt overhang, unemployment, and so forth, growth has to be front, left, and the center. Otherwise, all these things that we are doing, if we don't get growth going, they will not really hold in a sustainable way. So let all of us make it our duty to see what we can to support growth. Conclusion. To reiterate, the Monetary Policy Committee decided to raise the monetary policy rate by 50 basis points to 10%. This is in recognition that inflation not only persisted above the 6 to 8% target band during the second quarter, but moved further away from the target in July 2023. It is currently projected to remain above the target band over the forecast horizon, as I showed. Left unchecked, this would undermine the gains already made in restoring macroeconomic stability. The committee recognizes the significant structural reforms undertaken by the government, which are reflected in lower fiscal deficits, external debt restructuring. As we said, it couldn't have happened if there were no strong reform measures underway, and broader efforts to promote investment and private sector-led growth. The committee's observation is the financial sector will remain relatively well capitalized, and in fact, we see that the exposure to risk for the sector is moderate. So, as you will see from the Act, we have at every juncture to look at what is happening in the financial system, as well as whenever we are dealing with monetary policy. And likewise, when we are dealing with the financial system issues, we have to see what happens, because these are the twin objectives of the Bank of Zambia. The committee also raises that these measures will support the entrenchment of macroeconomic stability and the structural reforms that are being undertaken. What are these measures? What we are saying is that in the financial sector, there are quite a lot of reforms that we are undertaking as well. Or for example, just the Bank of Zambia Act, new act, that's a major legislative reform. We are also in the process of reviewing the Banking and Financial Services Act, as well as the National Payment and Systems Act. All these are meant to help improve intermediation and financial inclusion. We are also looking at measures to address supply of credit to notably the SMEs working through the financial institutions. So all these, together with what the government is doing, should give us the opportunity to push growth and other developments forward. The decisions on the policy rate will continue to be guided by inflation outturn, its focus, and identified risks, including those associated with financial stability and the external restructuring. Thank you, and God bless.
At this point, we are going to go for question and answer session. As always, please state your name and the media house that you represent before you ask your question. So we'll take the first three sets of questions from the auditorium, and then we'll go online. If there are any questions, we'll take three, and then we'll come back in the auditorium for more questions. So who will be the first to go?
Executive President of the Rainbow Newspaper Limited. And my name is Comrade Derrickson. I would like to ask my first question. How can boards create a stable culture within the debt management? As you know, a stable exchange rate is the most important thing for business growth. And the last question would be, I know that Bank of Zambia has taken hold of Development Bank of Zambia. Do we see Development Bank of Zambia coming back in another form?
Thank you. Next question.
Thank you. Allow me, please, to ask the question while he's seated, but all protocols observed. My name's Donald Mumba. I'm the managing editor for the Zambian Business Times. I've got 3 questions, and I think some of them might go to the other directors seated. So, first of all, one of the biggest challenges we have on the Zambian market is the cost of capital. It comes in different names: cost of borrowing, cost of funds, and so on. But then what you will find is the banking sector is, their rates are somewhere around 24, effectively up to 30%. So we decided to take it around 30%. The non-bank financial institutions do something like 5% per month. So if you annualize that, it gives you about 60%. And then if you go in the market, and I'm talking about statistics that we get as a business media house, you will find that these groups, lending groups and so on, they're lending at 10% per month, which takes you to about 120%. What I wanted to find out from you, Governor, and your team is what are the maybe top 3 measures that you are taking to make the cost of borrowing sustainable, to make the cost of borrowing affordable, especially, and I think it affects mostly the local players, the SMEs, local corporates. We know most multinational corporates are able to lend or to access funds on various international forums. So that's the first question. Second question is on liquidity. At least I saw in your presentation, it talked about the reduced levels of money supply. But as well, I think from some of the random surveys that we do as Zambian Business Times, we find that there's a consistent theme around, especially the local players, that there's no money in circulation, there's less demand, and such kind of sentiment. We saw it taper a little bit, I think when NAPSA came in, with those cash payments that we saw coming through. But as we've seen NAPSA pay out some of, especially the big claimers, we are seeing that theme return much strongly. Again, what measures are being taken to improve money supply? That's from the monetary side of things. And then as well, I think you can also talk about some of the actions that we should expect from the fiscal side, because we do know there's an interplay between those two. My last question goes back to it's something that most of us have grown up with. The Kwacha inability to hold itself. I think at one point we dropped 3 zeros, we're at 5. Now we're back in the 19-20 Kwacha range. But then at some point, I think most of us from the financial business media, we saw gold being discovered. And I think recently we even had the gold scandal at the international airport. So the issue around gold in Zambia, it cannot be ignored. I think various pockets are coming up. What is the Bank of Zambia doing to revive the alternative gold reserve? Because we know, I think the FX route has been tried from 1964 to keep as much dollars as possible, but as we know, the mining sector is not held in Zambia. So again, what are the major things that we should expect, both on the monetary side and what you would propose also for the fiscal side? Thank you.
My name is Elash Langwa. I write for the Xinhua News Agents, the official news agents of the Chinese government. The current international debate is on transforming the international financial system. There have been arguments that dependence on the dollar is making international trade very expensive. Like, for instance, here in Zambia, imports are very expensive because of the use of the dollar. And there's an argument that this must be changed. What is your comment on this?
Thank you very much, Elias. At this point, I'll ask the governor to respond to those questions from 3 people.
Thank you very much, Derek, for those questions. The way I understood is that your question to me is that in the context of debt restructuring, how can we expect a stable kwacha, right? I think we will take this together with the one of the questions that Mr. Mumba raised on the stability of the kwacha. Now, debt restructuring is extremely important for us because, as we have been pointing out, when we defaulted in 2020, we fell into arrears. We had to appeal to the international community through the Debt Service Suspension Initiative so that there would be no scramble against Zambia by the creditors. So that was holding until 2021. Obviously, we had to look for another way of resolving this. I think in other jurisdictions, you see that when even a private company comes under pressure, they go to court and they seek protection of the court. But for sovereigns, that's not usually the case. You have to find a platform. And I think we have to thank civil society in here because they have been very forceful in calling for debt forgiveness, debt relief on this. So for us, we found ourselves that there was this new arrangement, which is the common framework, which was introduced by G20. Now, why do we have to have debt restructuring? One is to give us some relief so that we can be able to meet our needs of development. So indeed, we started that process, and as we pointed out, we did reach some agreement with the official creditors early this year, which enabled, first, it was a promise that they were going to do this. We got the ECF in August this year. Subsequent to that, we had to, it was August last year actually, not August this year. But you see, because of the prolonged restructuring process, it had to take almost another year for us to get the first review concluded this year. Now, without that, we would really be vulnerable because the debt overhang is extremely heavy. Now, what you see in the market, cast your eyes back to 2022 when we had that breakthrough in getting the ECF. There were some positive sentiments. We saw some flows coming in. The kwacha strengthened, and we moved on. But because the other needed part did not come into play immediately, we saw that that momentum got lost again. So we moved, and again, this year in August, we were able to reach this. Again, you see the kwacha appreciating, but very short period because the other aspects did not come through. So what are we saying by saying what I'm saying? Is that for us really to have this stability on a sustained basis, we need to have a consistent measures delivering on the things that we need to do. One, we have had some challenges in concluding the deals in the mining sector. The expectation that by now that would have been done, it hasn't happened. But meanwhile, the economy has to move on. But in so doing, there is pressure. You saw also the restructuring having delayed. There were a number of other challenges that were introduced in the process. You see, when the kwacha depreciates very steeply, that's very, very costly to the government. in that anything that is denominated in foreign currency goes up. Even to you, it is the case. So our role is to try and moderate that so that there is no wild swings to the exchange rate so that you can plan. But how can we do that? Our tools as an institution of monetary policy, they are mostly focused on the demand side. If demand is perceived to be the cause of the problem, which would be the case because for any trade to happen, there is a buyer and a seller, all right? So the buyer has to have kwacha to buy the dollar or the foreign currency. So this is why you see that central banks tend to tighten liquidity so that you have less kwacha available to use in the transaction of dollars. But this has to be balanced with the other needs of the economy. So it's not a very easy balance to strike because if you overdo one side, then you get other adverse problems. But what is the most sustainable way to get that stability is really to increase on exports because exports are the ones which are going to bring you the foreign exchange that you need. And that's one. Two, you have also to look at, are there mechanisms by which you can substitute some of those foreign obtained items? So local production, local value addition is extremely important because then you get a substitution of the imports by locally produced things. Last week, I think it came out even in the media, when we went to visit United Capital Fertilizer, for example. That's a very significant intervention that that group of companies is doing because whereas previously we are importing much of the fertilizer we are doing, now some of that is being sourced locally. That helps to conserve the foreign exchange that we have to externalize. So the debt restructuring is a must if we are to bring stability, but we have to have other measures to augment supply of foreign exchange. I think we have shown you in the slides here that supply is quite constrained. So in an environment where there is constrained supply, but demand doesn't reduce. It's just like on the budget, there is revenue and expenditure. Expenditure is always there, but for the government, taxes are not coming every day. And if they come, the ones which come daily, they are very small flows, but it comes at a distance. That's why the borrowing in between becomes important. So what am I saying? What I'm saying is that we have to augment the debt restructuring with the other measures that will enable us to earn foreign exchange and also begin to produce some of the things that we acquire. We have, unfortunately, a taste for foreign items. So even when we go into a market, a place, you find the people, how many of you spend time if you find someone say this is locally produced? Oftentimes you just cruise past and look at the imported item, even though the locally produced item could even be of better quality, but the perception is that maybe it's not as good. So we have to begin to do that. Others are doing it. That's why they are not as susceptible to those volatilities that we are talking about. So since I touched on the issue that Mr. Mumba raised, maybe it's important to touch it, to relate it to gold as well, because you say that, what are we doing? Okay, Bank of Zambia, we are buyers. So the producers are out there. It's you, if possible, and others. Now, the way we see this to really benefit us is that we buy in local currency. Because if we use dollars or euro, then we're just doing a substitution. Now, we have a contract with the one of the big mining companies. But the amount that comes is not excessively large. Then when you have these small players, it's very difficult to get that gold in the manner that it can be stored as a reserve asset, because it has to have, is it 99% purity to be a bullion? Maybe DGO here can elaborate on some of the challenges. When you get it in less than that format, you have now again to look where it has to be processed, and that's costly. And nowadays gold, also there are these restrictions that they will ask you, where did you get that? If it is gotten in places where they are not sure, they will not process it because of the history around gold acquisition. I'm sure you colleagues will remember the stories of Sierra Leone, Liberia, where people were really perished because of gold. But maybe DGO can add and some other questions that you can.
Thank you, Governor, and good morning, everybody. Maybe just to follow on, I guess, from Derek's question, before I come to the gold, I think there was a question of whether DBZ is going to continue. I think the announcements which were made both by ourselves and by the Minister, indeed, both recognize the importance of having a development finance institution in Zambia. I mean, some of these other areas we're talking about in terms of how do you encourage growth, what is happening with the cost of capital. These things need a structural change to take place, and we need an effective development finance institution to actually be up and running. So the intention indeed is to have a development finance institution, but to do things a bit differently. So there will be a regulatory review of the laws which will govern that development finance institution, and of course discussing with the shareholders who ultimately will be the ones to set it up. We obviously hope that that will be well capitalized and we can have strong partners in building that development finance institution, but it's very clear that that is a very important thing to have. I think on the gold side, just to reiterate what Governor said, so indeed, Donald, I mean, three very good questions. On the issue of gold, of course, we need to diversify our sources of reserves. As you know, we've already been buying gold. This year we've bought, I think, about $25 million up to July. And I think up till the time we started, we're around 114 million in terms of the cost. Obviously, the gold price has improved since then, so the market value is a little bit higher than that. So that's important. There is, this also has been recognized across government. So I know that on the government side, they are looking at how can we better organize the critical minerals which are there, and how can we set up a system in which you can bring in the small scale producers in an organized way. Because as Governor has mentioned, for us to hold gold, it must be a bullion standard, but not just a bullion standard. It must also have been, we must be able to demonstrate that it was actually mined in the right way. And this is important for us purely on the liquidity side, because right now the gold we buy is stored in London. We can trade it, and it's a strong asset in our reserve. So the way in which we mine it, the way that we can show that it's been mined properly is going to be important. But the government certainly is working on that. We are part of those efforts which are going on, and hopefully we will be able to structure a way in which we can purchase gold. I don't know, there were issues around the cost of capital. Again, this is very, very important. And you mentioned the different sectors, the banking rates, non-banks and lending. What are we doing? The cost of capital, I guess we can come back to principles for us, right? You can think about cost of capital perhaps as having three broad things. One, there's an opportunity cost. Where am I getting the money from to lend you? There's an issue of risk. What do I add on top of that? And obviously for the institution which is lending, there's an issue of profit. Now on the opportunity cost, typically in our market, it's been the case that people say, well, look, if I can lend money to government at 25, 30%, why should I lend to you? So that's kind of like a starting point. Also, if they can say that, look, inflation is running at 20, 30, 40%, how can I then that's my starting point, okay? So the first point to say is that you have to deal with those fundamentals, the opportunity cost. And what we can say is that if you look at the government, the strong measures they've taken on the aspect of the fiscal policy, what we expect to see going forward is that with the deficit shrinking, we should see the cost of government borrowing come down significantly. The example we have is what happened after HIPC. And obviously this is in the context of if we finish the debt restructuring properly and the government continues with its current reform efforts, we expect to see that will collapse. So one pillar in which people can say our opportunity cost of capital is high will go away. Typically inflation. That's why the governor is saying that we do need to fight inflation, because again, if we control inflation, people are less able to say that, no, this is why my cost of capital is high. So the opportunity cost of capital can be addressed by strong macroeconomic reform measures, which will have benefits for the overall system. So that's one. The second is the issue we talk about of risk. Again, it's how you manage it. So people will say, and governor I think often talks about perceived risk and what's the actual risk which is there. We think that if you have credible policies, first of all, if you are encouraging growth, people see the country as less risky. If you are having policies which promote the private sector, which are stable, again, you're working on this issue of risk. But also from our side, from the financial sector side, the issue of financial stability, how well the financial institutions are run and so on, also is helping to reduce risk going forward. So there are certain things which we are doing on that side. I think the governor also mentioned other interventions we're trying to do to make lending better. So we did the targeted medium-term refinancing facility, for example. One of the things which came out of there is people said, but you're not taking any risk yourselves, it's all on the bank. So we said, okay, we'll look at that to see if we can come into some kind of guarantee arrangement. So again, those kind of efforts should help reduce risk. And the last part is really about profitability and financial institutions. And there, I guess the fundamental thing which drives that is competition. Can we reform the financial sector so that you, the individual, have choice where you can get your money, but also that you have institutions which are strong and well supervised? So I think, kind of broadly, those are the areas we're sort of looking at. And these are activities, it's not just Bank of Zambia. We sit with the SEC because there are other sources of funding which clients can get. We also sit with PIA. We have a tripartite group who we meet and we discuss things. So all of this work is going on in the background. I think if you want to look at the broader sweep of it, if you look at the Memorandum of Economic and Financial Policies, again, what we're trying to do on the financial sector, they're kind of articulated there. And those are the things we're sort of pushing. I don't know on liquidity, I guess the issue of money supply coming down and there's no money. At the end of the day, I think the most important point the governor showed in his report that we're on a journey, right? So the first thing is that before it was that the government is crowding out. And you saw on that chart, I think it's just 7 or 8, before the government was red, it was the one dominating credit. Now the private sector is the one dominating. That graph is showing it's coming down, but it's still positive, which means there's still credit going out there. Of course, there's the issue of can we get that credit now to the small scale people, to the small businesses? And we've got to build a couple of things on that. We've got to build lower inflation. We've got to build better macro stability. We've got to build better reforms of the financial sector through things like credit guarantee and so on. So those are things which you're going to see over the next 3 to 6 months, I think, that probably there's work which is going on. Then I'll leave the really big question, Governor, from Elias on the international financial system and its architecture. Thank you.
Thank you very much, Tijo. Just to add on some of the measures, also the administrative measures we took, we recall we did remove some of what we called unwarranted charges. And we are continuing to sift through to see what other charges are unwarranted and shouldn't be imposed. One other thing I think to add on to what Tijo said, that the borrowers also have to really be aggressive. We had started a process of advertising different offerings by different institutions in terms of interest and all that. But there seems to be inertia, even when you see that you are not getting the best deal, you still go, what will I gain? Believe you me, in other jurisdictions, people are aggressive, and by being so, they force the institutions to respond. If you don't, even if you are ill-treated, then they will continue to ill-treat you. So we see a number of complaints, people coming, which could very easily be resolved if you were to engage the institutions that are involved. So there may be small, but cumulatively they can add to something big. So this is a journey, as has been pointed out. We'll continue to do that. Yeah, on Elias's question, yes, we have seen a number of pronouncements, institutions, governments going to reduce the dependence on the dollar. We are also engaging in those conversations to see how best we can position ourselves. For example, with the debt restructuring now, we are looking at the possibilities of whether it would be possible to redenominate some of that exposure that we have in other currencies. For example, if I take just like South Africa Rand here, if it was the case that the South African companies here were accepting to be paid in Rand, I'm sure I would have seen a very different landscape. But unfortunately, that's not the case, because our colleagues still have exchange control in South Africa. So those who earn foreign exchange, I think they feel they have a better way of getting foreign exchange when they have it. So they insist on being paid in dollars. We are actually pushing in the payment arena. We have, under the SADC Committee of Central Bank Governors, developed a payment arrangement. Maybe we are not marketing this as much as we should, whereby you can buy things in a local currency and pay your supplier in local currency. And us as central banks, we meet the settlement arrangements. Because kwacha, we have no problem supplying kwacha. The South African Reserve Bank has no problem supplying the rand. Malawian Central Bank have no problem supplying the Malawian kwacha. So what we are encouraging is the use of our own currencies, so that we obviate the need to use other currencies. There is a reform here which maybe you are not also recognizing on the national payment switch that we did, and it's ongoing, where we are trying to get the switching being done locally. I think when you go to some of these ATMs, you see when you push your card in, there will be a message you say, "Welcome to National Payment Switch." You may not understand what that is. What it means is that if, for example, the card that you hold is an APSA card, but you go to a Stanbic ATM, that the moment you are pushing that card, there will be a switching behind the scenes which you don't see, that they will recognize that APSA card on the NAPSA. This is because of the national payment switch. That arrangement is expected to bring down some of the cost, which is another element to Elias's point of reducing cost of doing business. So there are many things we are looking at. At the continental level, we are pushing for what is called the PAPS, Pan-African Payment and Settlement System. This has been piloted in West Africa, where we are using local currencies, domestic currencies, to settle. Now, one of the challenges we are facing is that some of the countries they want to use the dollar or they want to use the euro. Now, among us as African countries, we don't produce the dollar. So we can't supply a large enough amount of dollars when one wants. But if we were to go our local currencies, that's something we can handle. So this program is being accelerated. We had just earlier this month a meeting in Livingston of the Association of African Central Banks. That was one of the conversation points to say that how do we improve payment systems that we avoid using third currencies. In our case here, we also had entered some arrangements with Tanzania, for example, to, on the borderline, to use our local currency. But some unscrupulous people kind of manipulate this thing by crossing borders when the arbitraging arrangement. But that's not reason to stop. We are continuing, we are engaging. So the point is that there is an active agenda to try and use our local currencies, because that's the only way we can avoid some of these high costs. Again, you see, when you use the foreign currency, you may lose sometimes if you are seen not to be obeying certain protocols. You could be kicked out of the correspondence arrangement. That is very costly. So we are looking at all these. We are looking in combination with the anti-money laundering and financing of terrorism issues. In fact, later this early next month, there will be a meeting in Livingston of Council of Ministers on these very issues of money laundering and all that. But all these are aimed at trying to make the platforms easy, safe, and secure, as the advert was saying there. But it's not, there's no one magic wand that one day just says, voila, there you are, you can do it. But the process is underway. So I hope we have answered your question. I think those were the questions.
Governor, we'll take 3 from our online audience, then we'll come back to the auditorium. The first question, Governor, online is the bank going to reconsider the decision to limit foreign participation in government securities auctions in light of low levels of supply of foreign currency? The second question, when will the credit guarantee scheme be rolled out? And the third one, what is the latest update on the deposit insurance bill? Governor, you may take those.
We issued a circular to the effect that there is this limit, and it has a time frame, which we say that this will be in place during the time of the program that we have. Why? Well, if you looked at the agreement that was reached, there are 2 parts to it. One is that the creditors were arguing that you guys, you are able to pay more than you want to pay. But the reality on the ground is that we are not able to. That's why we defaulted. But they argue that no. But supposing through implementation of this program, your carrying capacity increases, what are you going to do? So we said, oh, that's a fair point. We said, then that's why there is this contingence mechanism to say that when we come to 2027, an assessment will be made on where our carrying capacity is. Should it turn out that our carrying capacity has improved, we could carry a higher debt service, then we'll be willing to continue servicing debt at that level. On the other hand, for now, we consider ourselves to have low carrying capacity. Therefore, we are going to be paying at a lower. That's the relief that you saw of us reducing our debt service to $750 million over the 20-year period or something like that, a 10-year period. So this arrangement that we entered into was in recognition of the demand that the creditors were making, that why is it that we should be the only ones who carry the burden? What do we mean by that? We mean that by offering debt relief, you are actually carrying a burden because you are foregoing what you could have earned. So the argument was that we don't want other people then to benefit at our expense. Now, we resisted and succeeded in avoiding the holders of our domestic debt who are non-residents. This is the NRH argument that you have. Because that, I think someone asked actually the question, why don't we let them back into thing and review that? The point is that if we allowed that to happen, it means that our domestic market would be killed. And yet, that's the market which made us survive to this day. So after back and forth arguments, we came to that understanding. Yes, that's not going to be the way we go. Now, players looked at what is happening elsewhere, notably in Ghana, where Ghana included domestic debt into the restructuring. And there was a lot of acrimony arising from that. So others who were looking at us were saying that, you guys, it's a matter of time. You may also go that way. We said, no, we are not going to do that, and we have reached. So this arrangement that we have is not a trivial one. So how do we then demonstrate that in good faith we are addressing this? This is where we put a cap on the growth of primary issuances to non-resident holders. So it has a time frame, as I said, but I went in a long about way to explain what underlies that, because it's important for you to understand. It's not just an easy matter that we prevailed. No, there are real economic challenges if we were to go that way that was being proposed. So this, if you will, is a way of us sharing that burden so that we don't get us exposed more to the non-residents in that sphere. But they are free to come in the secondary trading. So there's no limit there. They will do that. I hope that answers that question. Credit guarantee scheme, when is it going to come? I think Dijo touched on that. There is some work being done to do that, but maybe you want to elaborate a bit more on that.
Thank you, Governor. Indeed, many of you may recall that we did sign a memorandum of understanding with the National Advisory Board on Impact Investing, which is a local outfit. And the design of the credit guarantee scheme now is well underway with teams from the Bank of Zambia as well. So I think now what we're looking to is hopefully to have by the end of the year the scheme fully designed, and then we look into early next year as to how we roll that out. Because the emphasis for us is on really transforming the financial sector to be able to manage risks better, rather than just focusing on having money in a pot and people can come and borrow from that, because we've seen that these guarantee schemes have had a very tricky past. The deposit liabilities insurance bill, yes, okay, so this is also, okay, so some background is important here. We did have a deposit insurance bill designed a couple of years ago. This was before the current government came in. At the time, when it had gone to cabinet, there was a decision that we shouldn't set up a whole separate body just to deal with deposit insurance. And what was said was that you should just have this issued under the Banking and Financial Services Act. And so one of the things in the way we were conceptualizing it is that we then needed to reform our own internal arrangements so that we could house the deposit insurance in-house and then eventually, as it develops, take it out. So with the enactment or the commencement of the new Bank of Zambia Act, we're now moving towards taking a restructuring to the board, which will provide for the deposit protection scheme structure to be set up, and then after that we will move with setting up the scheme. I think the only other point maybe to mention is just that in its construction at the time, the understanding was that you would have a period of time in which you are collecting money. So in other words, the scheme wouldn't be active. It's a bit like, NAPSA before you retire, right? So you invest money for a period of time, you build up the fund, and then after that, the deposit protection scheme would come into place. So that's basically the way the arrangement is looking to be. Thank you.
Thank you very much, Governor. So we don't have much time, but we can take the last round. Please just ask one question so that we allow for as many people to ask. Just one question. Who will be next?
Good morning, Governor. My name is Sandra Mlinga from Sun FM Radio and TV. Governor, you have raised the MPR twice to counter inflation, but results are not seen, considering that inflation has continued to rise above the target range of 6 to 8%. How confident are you that this time around we are going to see the results as projected?
Thank you. Next.
Good afternoon, Governor. My name is Cynthia Nkata from Sky FM. What is the strategy model that Bank of Zambia will use to help government to control the increase in debts amidst challenging negotiations, especially with commercial lenders?
My name is Roland Kalango from Nati TV. Under interest rates, domestic credit, and monetary supply. In your presentation, you said growth in domestic credit and money supply slowed it down to 9.1% and 17.5% year on year in June, from 12.1% and 30% in March respectively. My question is, why is liquidity tight in a time of expanded CDF and NAPSA partial withdrawal? In other ways, what mechanisms or parameters did the Bank of Zambia use to determine or indeed arrive at these statistics against this background which I've given?
My name is Jeff Kapembwa. I write for Metals Bulletin. Governor, you raised some anxiety about the likelihood of GDP decreasing in view of the dip in the mining sector performance. Would your concerns be associated with the challenges being faced at KCM and Mopani? And riding on the same, what has been the impact on the copper receipts in view of the turbulences at the two giant copper producers? Thank you.
I'm Margaret Chota from Movie TV. My question is, how does the committee assess the current state of inflation and its impact on the overall economy? And what measures, if any, did the committee take to address any potential risks or challenges faced by the Zambian economy?
I'm Ketra Kalunga from Times of Zambia. I was following closely, but I didn't hear the question on the update on GBZ being answered.
I'm Patrick Soko from Camnet TV. I just want to find out what our central bank is doing. We have seen other countries exploring the possibility of having a digital currency. And we have seen that citizens are continued to be duped by unscrupulous individuals via issues such as cryptocurrency or Bitcoin. I want to find out what financial literacy mechanism can equally be put in place so that people can appreciate that some of these things are not legal in this country.
Governor, you may respond to those questions.
You excuse me, some names I was not able to pick them. Confidence we may have that this time around it will work. Okay. When we do what we do, it's based on a number of assumptions, right? This is why we could even show you the forecast. There is a certain expectation that we have about things developing. Now, when those things do not happen, or those that we fear would happen, then they knock you out of your path. So our duty is to explain to you why this is not happening. I hope we are doing something in that respect, that we don't just ignore that we made a decision and then we go on to make another one without regard to what was the result of what we made previously. So the measures that we are taking, let me put it this way, is that the policy rate that we announce here is expected to work in a certain way. Because as you know, the central bank is not everywhere. We have only 2 branches, the head office here and in Dollar. And we don't bank for any of you, but we bank for the government and the commercial banks. We are a bankers bank. So the way the policy rate works is to influence other activities in the economy. Now, a number of questions which have been raised here, like the cost of capital, and the answer provided, the opportunity cost and all that. All these are avenues through which the effectiveness of the tool that you are deploying can be checked. Now, we would bring inflation down to the target range if, for example, we decided to raise the policy rate by a huge margin. Now, if we did that, there is another cost to the economy because aggregate demand would reduce. And then you'll be complaining, there's no liquidity, there's no that. So it's a balancing act that we do and expecting that other elements will fall in place. So one of the things what we try to do in our reports, we hope you are getting, is to show that when we do something, what really happens, and I think we demonstrated like interest rates, there's a mechanism that it goes through, but it's not enough. We have to do a lot more than that. That works in an ideal situation, okay? So other measures have to come. If we have a fiscal deficit is not under control, that's a leakage to the process. If the exchange rate is depreciating, that's another problem that you are going to face, that it is going to hit you in the way of increased prices of foreign commodities. So all this, that's why we talk of macroeconomic stability. What do we mean by that? We mean that inflation must be under control, low and stable. Interest rates must also be predictable, low and stable. Deficit must be low and stable. The ideal level is about 3% of GDP. Then you have to have the exchange rate also being stable. So you can see that if at any given time these are not in place, even if you take action, it is likely to be checked by something else. So this is why it's a combined effort. We have to take legislation here to nudge people to do that. You see, like credit risk, which the DGO mentioned, we established the Credit Reference Bureau. Now, people go there, some complain, why am I reported there? because there's a bad borrowing culture. People borrow without expecting to pay. When they are called, they switch off their phones or something like that. So that has an impact on the transmission mechanism that we are talking about. When there is this debt restructuring problem, we had the non-resident holdings. The banks say, even the government now is risky. So they hold the money. That's the opportunity cost they are talking about. So all these have to work in a certain way. So our job is to influence. We are influencers. When we are talking what we are talking, we are trying to influence others to do what we think is the right thing to do. But if they don't do, then we have to look at another mechanism of doing that. I don't know if you have played the game of chess or even in drafts. So when you play chess or drafts, you make a move, right? Do you force the other person to move? No, you move and you wait for them to make the move. This is exactly what we are doing to that. But if that system is well calibrated, that process works. But now someone asked about why interest rates are high. If the risk-free rate is at 24%, so our policy rate is at 9%. So this buyer of government security can easily go to that, is that I'll make a return here. And why invest? So these are some of the challenges which are there, but it's a process. We have to convince each other, no, you should do your part and all that. I hope that helps. Then there was a question on to assist the government in strategy. We are part of the process of negotiating the restructuring. So I don't know if you have seen something lacking in that. The process is moving. The government way back, I think in 2019, engaged Lazard as our advisors, and that process is underway. We are engaging, and we expect that before the end of the year, we should also reach agreement with the private creditors so that we move forward. But it was a sequential process. First, you get with the official creditors. You have the MOU. That's the MOU now. You are going to go to others that know, can you offer me similar terms as these as I've offered? So this process is underway. Then on Roland, I'm not sure, and the growth in credit becoming low, and why is liquidity tight? Well, there are different ways of looking at liquidity. When we are talking of liquidity here, we are looking at the current account balance of the commercial banks, because that's where the commercial banks draw the money for what they use. Remember I said that we are a banker to the banks, so we look at how that moves. And that's what we try to marry with the policy rate that we are doing here. Now, for lending, it's different type of liquidity in the sense that it's not just the money that the banks get from us. It's money also they get from your deposits, generally, the repayments in loans, and so on and so forth. So that process is tight in the sense that they are not lending as much as was already pointed out. And this is where we have to find the mechanisms to enable them to lend more by addressing some of the rigidities which are in the system. But let me also clarify there, sometimes you say money supply is low. Yes, it's low, but the quantum is higher because the size of the economy is much bigger than what it is. What we are talking about is the growth here. You should understand that we are not talking about the quantum, we are talking of the growth of that quantum. Nowadays, I'm sure, I don't know where you stay, but where I stay, I see so many filling stations before I get to the office, which was not the case. I see so many markets. So it means that money now is being spread. You don't go to the same shop that you used to go to. So if you go to a banking colleagues here and say the money has reduced, I think they will disagree with you, because the amount of money with that currency that is we are issuing is quite large. Every day, or almost every day, our people are on the road to deliver money in sub-chest and so on. But it's now being spread on a wider basis. The point then now is truly to increase the earning capacity of individuals. So I don't know if the CDF we are talking about, that money you see, the government collected from you as revenue and is giving back in a different form into that. But that has to be utilized for it to make its way back. If it is sitting in a bank, then it is not available for use. So I'm sure you have heard in the past where the government was concerned that money was allocated but is not being utilized. So all these also take time to work through the economy, because if you buy equipment, you have used it. It's not available for another use. But we have to have a continuous flow of these resources. Jeff, sorry if we raised things that we are just pointing out to facts that, looking at what we know at the moment, which is what also the ministry pointed out, growth is low. But that doesn't mean that nothing is being done to address those things. But at the current level, this is what we are seeing. And remember, we showed a slide there where I say that 2024, 2025, we expect a pickup. Why? Because we can see this momentum building up. So facts are that at the moment it's lower than what we expected. So we have to report to you that this is what is happening. But that shouldn't be a source of anxiety. Rather, it should be inviting, what can we do to make this grow at a higher level? So I don't know, the DBZ, I thought it was answered. The thing is that DBZ, it was taken, it will reemerge not as DBZ, but a development financial institution under different arrangement, because the model that DBZ was following was not delivering. It was not meeting its objective for which it was set. So I think DGO pointed out that there is work on the legislation so that we have development financial institutions being established in a very strong way and can contribute according to their mandate. So what we said when we took possession of DBZ is that at the end of the 90-day period, we'll take stock and say, okay, the bad assets will go into a bad bank. The new assets, the better assets and new players would come forward and establish a new entity which has to operate under a new model. I hope that now clarifies that issue. Digital currency, maybe Digital, you can talk on that.
Thank you. Just very quickly, since I know we're out of time. I think on digital currencies, indeed, we'll be publishing a consultation paper. Indeed, a lot of other central banks are looking at it. We are aware of, I think, only 2 who are actually running it. I think Nigeria and I think the Bahamas Central Bank are running a digital currency. The others is in different stages of development. But the other point you raise is very important on these scams. Very often, the concept of cryptocurrency has just been used for people to basically take deposits from people, which is not allowed under the Banking and Financial Services Act. So they cover these in different names. It's a cryptocurrency scheme and so on. But essentially, they are taking deposits from people, which is a regulated business and they shouldn't be doing. And what we have been doing is when we find these or we hear from law enforcement agencies, we follow them up and we work with them to prosecute. So please, we are also conducting the awareness campaigns. Miriam and staff in the payment systems, they go around trying to educate people. The last point here is that we should be launching an automated system for complaints, which people can be able to utilize using their phones and so on. We had 1 or 2 structural problems. We're hoping we'll be able to launch it relatively soon. That should also enable us to interact with the public better. Thank you.
Yeah, but for the legal part, we issued that for the secular. Yeah, so we say that if you engage in that, you are on, but we have established a sandbox arrangement that those who want to test their concept, they can come and do that. So if you have that inclination, or you know somebody who has that inclination, direct them to us, then they can practice that in a safe environment. But for now, we are not issuers of that currency. If you do so, you are on your own, so to speak. Thank you very much.
So thank you very much, Governor, for those responses. A special gratitude to all of you for taking time to attend our briefing. Until next time, thank you. Do have a blessed day.